In order to qualify as a real estate investor, you have to prove that you've spent 750 hours or more in a calendar year working actively in the business. And that's one of the big things that we really talk to those types of clients about. And the avatar, if you call it, of that accidental landlord versus the person who's an investor involved in hundreds of properties is very different.
Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder and CEO of Zana Investments, Tim Little. And on today's show, we have with us Melissa Broughton. Melissa is a co-owner of Busy Bee Advisors, where she helps small business owners find financial clarity in their business through accounting and tax services. Melissa, welcome to the show.
Hey, thanks for having me today.
Yeah, it's great to have you. So we'll be getting into Busy Bee Advisors in a little bit, but before we go there, can you please tell me a little more about your background and how you got to where you are today?
Sure. It's an interesting story. I went to college just like so many other people did, and I was pretty clear that I knew I wanted to do something in business or finance. I come from what I like to call a long line of bookkeepers and accountants. I remember, my mom says I was probably 3 years old, but she was a bookkeeper at a bank back in the day when everything was manual. So I remember actually sitting underneath her desk and watching the paper trails from the 10 key calculators coming over. So I guess you could say it's in my blood, but went to college and got my degree in accounting. And of course that transitioned me, or I guess I shouldn't say of course, but that transitioned me into working my way up in corporate America. And the last position I held in corporate America was I was a controller for a mid-sized manufacturing company. And I found myself working 60 hours a week and sometimes more. What the pain point of that was for me was my oldest son at the time was a sophomore in high school, and our youngest he was little at the time. And I just felt like I was missing everything between work and the commute to work. I felt like I was either always thinking about somebody else's finances or driving to the location where I would be getting to think about somebody else's finances. So opportunity presented itself. I left that position and had opportunity to really reflect and figure out what I wanted to do. My husband, who is my business partner now, at the time had just finished nursing school. And so he was ready to launch his career, and it became this opportunity for us to switch and for him to be maybe the primary breadwinner for the family. And I went out for a run to clear my head, and I fell. And I say I fell, and people are like, oh, okay. But I fell and I broke my jaw. I shattered the majority of my teeth. It was a fiasco. We like to joke that we definitely purchased our dentist's second home and probably a boat for him, if not assisting him in paying for several of his children to go through college with what my mouth fiasco cost us. But through that time, I was in that place of being forced to just be still. I couldn't really do anything. I couldn't talk much. So in my mind, I got to formulate this ideal business plan. And I launched in 2017, and we saw this just growth. And we were experiencing probably a 20% growth month after month. There was just such a need for small business accounting, small business tax services, especially in the focus and realm of real estate professionals and real estate investors. And it's always a group that I've been incredibly passionate about serving, simply because you have such a varied background of people that are drawn into the space, especially in the investor space. So you may have people that have tons of business experience that jump into it and just want to be advised on how to pay as little in taxes as possible. And those people are always lovely to work with. But then you also have people who have come from totally different backgrounds. Maybe they inherited a property and they're ready to purchase another property, or maybe they just completely stumbled into the field for one reason or another. So there's a ton of opportunity for our firm to be able to provide not only bookkeeping, accounting, and tax services, but also to educate those clients. And that's what we're really passionate about. So
yeah, and that's an awesome story. I love how you walked us through that. And there's a couple of things I wanted to hit on. So
sure.
I always find it interesting when I'm talking to people and learning more about their background, the impact that their parents can have on what they thought they wanted to be, what they wound up being. And for you, it sounds like you saw your mom doing this thing and that got into your head too. For me, it was similar, but different. So
Okay.
my dad was a TV repairman and my grandfather was also a TV repairman. Unfortunately, that field did not exist by the time I was graduating high school,
Right.
but he moved on to managing at different stores and stuff like that. So I was still able to garner some of those lessons, but I didn't have that clear path that like some people have where they get to see it firsthand and are able to apply it in their own right, which it sounds like you got.
I did. I was really lucky. I was very fortunate. The thing for me that hit at a really young age was that math just makes sense to me. And there are a lot of people that are very numbers phobic. Like they want nothing to do with it. They don't even want to be taught anything about it. But for me, there was a comfort in the fact that 1 + 1 is always going to equal 2, right? It doesn't change. You don't have the variables like you do if you're, I don't know, working in a creative field or something along those lines.
Yeah, and that's exactly why we need people like you, right? You want someone who
Yeah.
actually enjoys doing the thing, especially if you don't. And that's especially true in business too, right? When we're looking at partnerships, and I'm sure this is the same for you, and you can talk about this, is you find complementary skill sets. And in real estate specifically, it's someone might be great with the numbers, whereas someone is much more personable and outgoing, and that matchup works out great. Talk to me about how you guys started Busy Bee and actually came together as partners on that business and what that looked like.
So it's another really awesome, in my opinion, awesome story. And it's funny because when you have both of us on, because we've been on several podcasts together, we actually host our own podcast together. We're pretty good at not stepping on each other's toes. But when it comes to our story, we both get really excited about it. So he was a nurse, as I mentioned earlier, in 2009. So right before the big pandemic that shut our whole world down, he's in his healthcare field. Now, we, of course, didn't know, just nobody knew what was going to happen right before the pandemic. So he's working in the nursing field. It's December, beginning of December. And because he was a nurse, he was either on call every holiday or the day after every holiday. So we never could really make any plans around the holidays. And my business at the time was picking up incredible momentum. And I said to him, we had been invited by friends to go out for New Year's Eve. And I said to him, you should quit your job and you should come and work with me. And I think I probably just asked at the right time. It was probably at the end of him working a double shift or something along those lines. But we penned out the numbers and we figured out that it really did make sense. And I really sold him on the quality of life and being there for our kids and all of that stuff. And so he gave his notice to the facility that he worked for. And he actually had a background in finance. His was more construction focused. His family had owned a family construction business. So he was familiar with the numbers and familiar with the tax side of things. And essentially he went back to school, got took some classes to get his license, passed the exams he needed to, and decided that he would focus on the tax side and I would focus on the bookkeeping side of things. That took us about, I don't know, I'm going to say about 6 weeks. And then all of a sudden we're into 2020, which is when the pandemic happened and the whole world is shutting down. And it was this crazy, I don't know, it was almost as if I had a crystal ball at the time when I asked him, which I, of course, didn't know what was going to happen. But it was a pretty neat thing to be able to weather the storm of the pandemic together.
Yeah, and that's interesting whenever you guys come together and talk through big decisions like that, right? Because I think that is a pretty big decision when you're talking about one person completely changing their career field. And I want to hear more about the risk calculus that went into that because I'm thinking that's a pretty high demand job, relatively steady income compared to the much more entrepreneurial side of starting your own business. What were your discussions about risk in that scenario?
So it's interesting that you put it that way because I am very much the entrepreneurial spirit. I've always been drawn to, even when I worked in corporate America, always been drawn to helping people with business plans and the whole thought around working for myself or somebody working for themselves, even as an investor, really excites me. My husband is completely the opposite. He is your ultimate, he is your, like, you laugh, but he is your ultimate company man. Like, he is the guy who says, what needs to be done? I'll do it. I'm never going to call in sick. I'm never going to disappoint. You tell me what's expected and I will do it. But that's very different than having the entrepreneurial spirit. So for him, the first piece that I needed to, I don't know, prove was
Sure.
that we could afford to continue our lifestyle at this in the same way that it was. And what I was actually able to point out to him, and COVID bit me on the butt on this one, but was the fact that we would have this ability to travel and to go all of these places with our kids when they were on breaks and stuff like that. So the world got shut down. That threw things for a loop, but it's proving out the money really put his mind at ease, and seeing that I had a 2-year at that point track record of steady growth in business. And
Okay.
by adding him as the tax component to it, it opened up a whole new realm of income possibilities for us.
Yeah, and that makes sense. And in your defense, I don't think you could be faulted for not taking into account a possible pandemic. So that's fair.
Wasn't seeing that one coming.
So I think it's helpful to talk through the different needs at different stages of a business. And I think a lot of the people listening right now, they probably have 1 to 2 single family rentals, right? And so what do you recommend from a bookkeeping or tax perspective for someone who's in that situation, just getting started on their, I'd say, real estate investment journey?
And that's a really good question, because the advice and the conversations that we're having with clients who are at various stages of their, let's say, investor journey or their real estate career there's similarities, but there's also a lot of differences. I look at those newbies, or those people who are at that entry level, maybe somebody who's inherited a property, because we meet a lot of those people where they just have this, oh, I'm now a real estate investor. It wasn't something I set out to do, but I have this property that was turned over to me that I inherited, and I get to either sell it or do something with it. Let's take that person and put that person in the bucket with somebody who's actively purchased maybe their first or second property. The biggest thing, and to me, it seems like a no-brainer, but maybe it's not. You don't necessarily need to hire a bookkeeper at that point. And in fact, in most cases, we really tell clients that it's an expense that they can save on at that point. They can generally keep track of things themselves, honestly, in an Excel spreadsheet. If they want to embrace technology, they can use something like QuickBooks Online, and there's ways to separate out the properties. But by gosh, keep separate accounts for your separate properties. I don't know. And I think any tax person listening to me out there is probably agreeing, but I think investors aren't yet embracing that this is a business for them. They feel like it's almost a hobby, it's a side thing. And if you get audited, or even just when it comes to tax time, by not having separate accounts for your personal and that property or for the individual properties, you're just asking for problems down the road. And you're, what is it, cutting off your nose to spite your face. You think you're saving some time in the short term by having one account for everything, but pulling those transactions apart, it's really complicated. It's complicated for your tax professional, but where we've really seen people run into trouble with that is if they get audited. Because if you're running everything through a personal account or your personal credit cards and it's being commingled, you go through that audit, and we've seen agents just disallow everything. And you can go through the fight. You can hire a tax attorney and you can fight it, and you'll probably win. And I say win with big air quotes, because you'll end up paying that tax attorney probably as much, if not more, than what your tax liability would have been. So keep separate accounts.
Yeah, exactly. And it's that whole ounce of prevention thing, right? Like, how much does it cost you to set up a business bank account? Virtually nothing. How much does it cost to open a business credit card? Virtually nothing. But those are like the two simple steps that you could take to avoid all those expensive problems that you were just talking about.
It's so true. It takes you maybe an hour of your time to go down to the bank. I know nobody gets excited about going down to the bank to open up an account, but worth the time spent early on to do that.
Yeah, and I don't know about you, but I would also recommend that people set up a business email as well. It just helps to present that more, one, professional image, but two, it helps with that separation. And again, it doesn't cost anything in many instances. You can get paid business emails, but if you just want to start at Gmail, it's not that expensive, and it goes a long way towards professionalizing and also at least creating, I don't want to say a facade because it's not fake, but the perception of it being a business versus a hobby, like you talked about.
I think we've certainly, my husband and I have owned other businesses. And sometimes when and we'll talk about passive investors soon, I have a feeling, but sometimes when you're a passive investor in a business, it does feel like a facade when you're opening up a separate account or you're creating an email address for it. It's a true business, but because you're not actively putting your blood, sweat, and tears into it every day, sometimes it doesn't feel like it's a real business. So yeah, that the email address is true. That's an excellent idea.
Yeah, and I think what you were getting at with those folks who like inherit, I think of the accidental landlord, someone who either inherits this property or maybe they moved, but they wanted to hold on to it as a rental, and that's the first, or maybe they had a divorce or whatever the case is. They have this property that wasn't intended to be an investment, but now they find them in the situation where they are a landlord. So I call those the accidental landlords. And that's, I imagine when a lot of people are seeking you out and say, hey, what do I need to do?
And sometimes when clients have that conversation with us, we're incredibly honest with them, because we'll tell them straight out of the hello that you may end up wanting to sell all of those properties after you talk to us. It's not that we're wanting to talk you out of this business, but if that wasn't your intention, especially for the accident, I love that, the accidental landlord. If that wasn't your intention when you started out, it's not a turnkey, at least not right immediately. It's not a turnkey situation. So there's work and there's time that it takes.
Yeah, and some people may get lucky where those properties takes off like gangbusters and appreciates like crazy. But again, if they didn't go into it as an investment, there's going to be just as many properties that are not cash flowing at all. And it almost becomes more of a liability than anything else. And so I think that's what you're hitting on there. So let's switch gears. Let's talk about someone who decided to take this thing a little more actively, a little more seriously, and say they're a general partner now on hundreds of properties and they're raising capital from passive investors. What do those folks, those syndicators we usually call them, what do they most need to consider, and what mistakes do you most often see them making?
So there's this interesting little loophole in the IRS tax code, and it's called the 750-hour rule. I, of course, can't remember the exact number of the tax code. I apologize, but it is a real legitimate thing. And essentially, if you're an investor or a passive investor, you're pretty limited on the things that you can write off, right? So if
Mhm.
you're involved, if you can imagine, and we have several clients that are in the situation of what you're talking about, where they're receiving a K-1 at the end of the year for hundreds of thousands of dollars. And you can imagine that if you're limited on what you can write off, it can certainly affect your tax liability, right? So it makes sense sometimes for those people to be able to classify themselves as a real estate professional, which they would be taking an active role in, versus just a passive real estate investor. And it's I hate to say trick, but it's a loophole. We'll call it a loophole. Trick freaks people out. In order to qualify as a real estate investor, you have to prove that you've spent 750 hours or more in a calendar year working actively in the business. And that's one of the big things that we really talk to those types of clients about. And the avatar, if you call it, of that accidental landlord versus the person who's an investor involved in hundreds of properties is very different. You hit that, and I'm going to say anybody who's on the passive investor side really needs to make sure that they're working with a tax professional. Maybe not a bookkeeper, but definitely needs to be working with a tax professional, because there are lots of different things that, if they're not handled correctly, can trigger an audit. There's also things that you just wouldn't know that you could push on and that you could take advantage of. And so there's money as far as deductions that you'd be leaving on the table. So that's the place where you really want to make sure you've hired a professional and that you're not trying to do your taxes yourself.
Yeah, and this can certainly get very advanced very quickly once we start talking about real estate professional status, because of course, among real estate investors, that it is coveted and something to shoot for, but there are very important caveats, like you talked about, one being the minimum number of hours. And correct me if I'm wrong, you also need to have more than 50% of your income coming from real estate. Is that
So
true?
that varies from state to state, and there's other
Okay.
things that kind of can make that a null point. But yeah, there are some states where 50% of your income is coming from real estate. And then, so if you really want to go down the rabbit hole on that, which we won't, I'll just say this. There's different things. If you live in a state where that's one of the qualifiers, we'll say, there are different things that your tax professional can do to present the information in a way for that to legally work and you to still be accepted as a professional and take full advantage of the tax code.
Yeah. And Melissa is amazing at her job, but I don't want to oversell that piece, because a lot of people, most people, in fact, will not qualify for real estate professional status. I don't want people to think that it's easy. Oh, I did some work on my properties, so I'm a real estate professional now. It's, it's not that straightforward. And there are certainly some real caveats that are big hurdles to overcome for most folks. There are some people that will certainly qualify. I have qualified it on some years and not in other years. So that's where it gets complicated. The only thing that I'll say again, so that we can jump out of the rabbit hole, is
Sure.
why it's so coveted is because of the benefit that it brings. Say you have a two-person household like me and my wife who's on the corporate side, right? And say she makes decent pay, six figures, and it's highly taxed. If I get that real estate professional status and have significant depreciation, I can not only, write down my own income, but if we're filing jointly, I can also write down her income, which can make a huge difference from the more basic, only being able to write down the investments that we have.
Sure. And even if those write-offs can kick you down to a lower tax bracket, that's a huge
Exactly.
difference. But yes, I'll agree. Let's get out of the rabbit hole, because I certainly don't want your listeners to be like, oh my God, I can't.
I know. We may think this is exciting, but not everyone does.
I think it's ridiculous.
All right. And so let's talk about that third category that you briefly mentioned, which are those people who are strictly passive investing. And I've done strictly passive investing too. And I don't think of that as a business. I think of that as just me investing. I get a K1 in my name. But what are you, as the tax bookkeeping professional, what are you thinking about for that person who is just doing strictly passive investing? They are a limited partner in some of these syndication deals.
So with each one of these categories, I feel like I could sit here and say, oh, they're my favorite group to work with. But those people who have intentionally gone into real estate as investors, or at least at this point, they're embracing it, and it's not their full-time business. They're not trying to push it to be their full-time business. The biggest thing I can say for that group is definitely the time that you need to have a tax professional that understands real estate investing. If you're a high-level investor, you can really get away with just working with a good tax professional. But if you're in that middle phase, like what we're talking about, where you're getting a K1, but you are an investor, you need to work with somebody who almost is a specialist in the field of real estate and investing, because there's so many nuances. And it's not that we're pushing anything. It's not that we're overly taking advantage of the tax code, but we understand and we know the tax code as it applies to your industry. And that's really important. And we've seen the difference. We've seen the difference when we've had clients that own multiple properties. They sell one of the properties. It's not tracked correctly for depreciation. And yes, we can go back, of course, and file an amended return, but there's costs associated with that. And you deserve to be working with somebody who knows your industry. That's what I'll say as far as that goes. It's also the time to either hire a bookkeeper or to actually make an appointment with yourself and make a commitment with yourself to be doing your bookkeeping for this business that's not really a business, as you said, on a monthly basis. Because if you wait until the end of the year, what we've seen is there's just tens of thousands of dollars that are missed on deductions. It's like cramming for an exam. Yeah, you'll pass the exam. Yeah, you'll be able to file your taxes, but do you really absorb the knowledge? And do you really get the full benefit? No, you don't. You forget about things. Tracking your mileage is something that's important at this phase. I find that a lot of investors that are somewhat in that passive investor phase, they're still involved with their properties, but they don't realize that they can track their mileage, and that can add up quickly. And it may even be time to look at, depending on what that K1 total is, to look at becoming a corporation so that you could, and I don't want to go down a rabbit hole on this one, but so that you could actually, through the corporation, put yourself on payroll and help to offset some of those taxes. So there's a lot of different things that happen at that phase.
Yeah. And I think the thing that I want to foot stomp the most about what you said is finding a tax professional who just understands real estate in whatever respect that you're doing it in, because I've seen the difference between the two. And when you have to educate your own tax professional on some of the benefits of real estate, it's probably embarrassing for them, and it's really frustrating for you. So that's the point where you need to sever the relationship and find someone who does this on a regular basis. And if it's a tax professional who has invested in real estate themselves, they're probably in a better position and better incentivized to understand and know, what they should be looking for and looking at.
Couldn't have said that one better myself.
All right, Melissa. Hey, we do have to transition to the turbo round. So I'm going to ask you 3 questions that I ask every guest we have on the show, and I just ask for a quick, honest answer. Are you ready?
Yes.
All right. What is one red flag every investor should look out for?
One red flag. I'm going to answer this maybe a little bit differently, but definitely be checking your K1 to make sure that the amount that's reported on your K1 is the same as what you actually received. If you're an investor, what you actually received is payouts. We've started to see an uprise on misreported K1s. And I don't want to say that it's done intentionally. In fact, I'm sure it's not done intentionally, but why would you want to be overpaying on taxes for a clerical error?
Yeah, no, I think that's completely fair because we catch mistakes from the higher level accountants who are doing the K1s ourselves that need to be corrected. So each of those investors should be doing the same thing and actually looking at the K1 to make sure that everything is accurate. All right, second question. What is a myth about this business that you would like to set straight?
Oh, that it's easy to make money. We'll just say that. That's my favorite myth about this industry, that anybody can be successful and make money as a real estate investor. I think that's a huge myth.
Yeah, it takes work. And by work, you have to study deals. You can't just throw money at something or someone and expect it to make money every time. You have to do your own due diligence as well. Completely agree. All right, final question. What does success look like to you?
I'm going to answer this one on a personal. So success to me looks like being able to work a schedule that revolves around my life, not my life revolving around work. It's all about that work-life balance. And that's been what my husband and I have been committed to since this company started in 2017.
Yeah, that's awesome. Yeah, it goes to a similar vein of what a lot of people come on here. They talk about time freedom. And I think that balance is part of that freedom because you're choosing how much you want to work. You're also prioritizing what you think is important, which is huge. All right, Melissa, I have to admit, I'm a little disappointed that Eric couldn't join us. I know it would have been amazing to just have that double whammy of you two on here, but it was awesome having you here. Please tell our listeners how they can get a hold of you and if there's anything else that you'd like to share with them.
So I would like to share one other thing. I meant to have it out and ready when we started the call, and I got so excited about talking about being at different sides of the country with you that I forgot to grab it. But I just published it's backwards. It's always funny when it's backwards on camera, but I just published my second book. It's called The 4-Hour Bookkeeper. And this book is actually dedicated really specifically, or was written really specifically with those small, maybe that accidental landlord in mind, or even that investor who's on the investment side, the people who don't need to hire a bookkeeper. And it breaks down exactly what you need to do, when you need to do it, into 4 hours a month. That's my pitch for that. And I would love to send any of your listeners a free e-copy of the book. If they're interested, they can feel free to email us. And I'm sure you'll have the email address in the show notes, but it's info@busybeeadvisors.com, and we'd be happy to schedule a consultation with you or send you a free copy of our ebook.
We'll certainly have all that information in the show notes, and I may take you up on that book as well, because
Perfect.
I will admit that's one area of my business where I haven't been as diligent, is the bookkeeping. So I could probably benefit from that. But
I'll
again,
send you a hard copy so it can go on your
What?
bookshelf back.
Oh, there you go. See, that's smart business acumen right there. All right, Melissa, again, it's been great having you on. This has been an awesome conversation. I look forward to continuing to see you do big things on your journey. Take care.
Thank you.